The war between Iran and the United States poses a global economic risk. This conflict is not just local, it has widespread consequences. From oil prices to inflation, every aspect of the economy could be affected. The heart of global energy supply lies in the Middle East. Iran plays a crucial role. This conflict could immediately disrupt oil markets. Almost 20% of the world's oil passes through the Strait of Hormuz. If supply is affected, prices may surge to $80 per barrel or higher. This increase results in costly transportation. It leads to higher production costs worldwide. The effects will ripple through various industries, causing expensive fuel and increased costs of goods. When energy prices rise, inflation follows. This impacts everyone. Global inflation could rise by 0.2% to 0.4% due to energy shocks. Costs for food, logistics, and manufacturing will climb. Countries that are already battling inflation will experience renewed price pressures. This will lead to a higher cost of living, reduced purchasing power, and slower consumer spending. War creates uncertainty, leading to volatile financial markets. Investors flock to safe assets like gold. Stock markets may decline due to instability fears, while energy and defense stocks might temporarily rise. This creates market instability and capital flight from risky economies, resulting in investor losses. A Middle Eastern war disrupts global trade and supply chains. Shipping routes in the Gulf will be affected, leading to trade delays and higher insurance costs. Fragile supply chains may particularly struggle. This could result in delayed shipments, rising import/export costs, and shortages of essential goods. During geopolitical crises, the US dollar often strengthens as a safe haven, while emerging market currencies may weaken. This instability can lead to significant financial stress in developing nations, particularly those reliant on oil imports. The impacts include currency depreciation and higher import bills, causing economic instability for weaker economies. Central banks now face tough decisions. War-driven inflation could prompt them to raise interest rates, slowing economic growth. Alternatively, cutting rates could increase inflation, leading to a potential stagflation scenario. This situation could result in a slower economic recovery, higher borrowing costs, and reduced investments. The effects vary across nations. Oil exporting countries may benefit, as well as sectors related to defense and energy. Conversely, oil importing nations and industries like tourism and aviation may suffer. Even oil producers may find benefits short-lived due to greater global instability. If the conflict extends, global GDP growth might slow further. Investment confidence may decrease, particularly in regions like the UAE, which is emerging as a financial hub. Reconstruction costs could run into billions, with potential for significant long-term damage to global growth. The IMF has warned about these risks. An Iran-US war isn't merely a geopolitical issue. It's an economic earthquake. In our interconnected world, disruptions in one region affect the entire globe. Energy markets act as a transmission channel, leading to inflation and uncertainty. War brings agony, loss of life, and mass destruction. We hope for common sense to prevail and for this conflict to resolve swiftly.